Welcome to the fourth leg out of 6 of our finance conference series in finance. And it's my great pleasure and great honor to welcome my long-term friend, Jean-Pierre Mustier, who, in spite of an overwhelming agenda, has accepted to come to speak to us tonight. I say a long-time friend, although he's much younger than me, because he was at the origin of my work at SocGen for now 25 years at least. And he is the reason why every Wednesday I go and work at SocGen. And for that, and for many other things, but essentially for that, I will be grateful to him forever. Everybody knows Jean-Pierre Mustier's fame and reputation, so he hardly needs to be introduced. However, I will comply to tradition and conference convention and try to summarize briefly his exceptional professional career. He was born in the same city, small city, Chamalières, in the center part of France, Auvergne, as the former president of the French Republic, Valéry Giscard d'Estaing. And incidentally, he is a graduate from the elite school of Polytechnique, as Giscard d'Estaing. And in addition, he is also a graduate from the no less prestigious École des Mines de Paris. From early 1987 to late 2009, he spent 23 years at Société Générale, where he swiftly climbed up the bank's ladder up to its very top. Actually, he ended up number 2. I am not going to go into the details of those 23 years, but just to stir some sweet memory, remind you that just fresh from his studies, he started by developing option pricing models, one with me, which we called Zozo 12. And I know now that he remembers that. And he ran the equity derivative trading activity on the Parisian option exchange, MONEP, which was created in September 1987. Then, and I'm going to speed up from now on, he went to Philadelphia in charge of the worldwide currency exchange option market, then Tokyo, London, Hong Kong, London again, each time being promoted to higher responsibilities, duties, and charges. In 2008 and 2009, he was formally appointed head of Société Générale Investment Banking and Asset Management, and made a member of the exec committee. I specifically mentioned asset management since Jean-Pierre initiated the big merger of SocGen and Crédit Agricole's asset management activities, which resulted, as you probably know, in the present giant of asset management, Amundi. What is less known probably about Jean-Pierre Mustier is that during the 2 years after his departure from SocGen, he devoted his time essentially to charities, either directly as a trustee of 2 UK funds, 2 charities, or indirectly as an advisor for various financial institutions, giving up his compensation for money donated directly to charities. That's an interesting aspect of his personality. From 2011 to 2014, he served as a number 2 of UniCredit, the first Italian group banking group by volume of assets in charge of all investment banking activities. Then he became, in January 2015, and I think it still is, but maybe you will confirm or not, a partner at Tyco Investment. Not anymore. Okay, so he was partner at Tyco Investment Management. In July of last year, he was recalled by a problem-ridden UniCredit, this time as its CEO. And it's in this capacity that today Jean-Pierre accepted to come and speak to us today. So many thanks, Jean-Pierre, and the floor is yours.
Thank you very much. Oh, sorry, Patrick, I need to move up the microphones. Thank you very much, Patrick, for your introduction, and thank you very much for all of you to be here tonight. I would say that you're very lucky to have Patrice Poncet as a professor. Patrice was kind enough to say that, he worked with me in thought. He taught me everything about derivative, and the first time I met him, he said, "But what do you think of the call-put parity?" I was thinking, I have no idea of what he's speaking about. He said, "But it's very important." I said, yes, it's very important. And then Google did not exist, so I had to do some extensive research to understand what was the call-put parity. And I finally managed to do that. And we had quite an exciting time, Zozo 12, being the 12 version or whatever of our program, to develop the option pricing for stocks, which is very different from the option pricing from currencies, because you have the dividend which falls on a given date and cannot be looked at only as a normal yield. So Patrice divided and looked at the Cox and Rubinstein model to make sure that we had the proper time series for the dividend. And I can speak about that for a lot of time, because I tried to rehearse and revise everything. And so since then, I owe Patrice a lot, actually, about the very limited financial knowledge that I have, having studied mining, actually, instead of finance in my early days. You forgot to say something, Patrice, which about my professional career, which I will mention now. It's a very unpleasant event of my life, but I think it's important and relevant for what we discuss. In that, in fact, I left Société Générale in 2009 because after the Kerviel fraud, which was under my watch, and that's something which happened, and on which I need to comment about, and I will comment about it later. What doesn't kill you makes you stronger. It was Nietzsche saying that, if I remember properly. And I think that while it was an extremely difficult event for the employees of the bank, for its clients and for its shareholders, it was as well something which was important for the bank and for me as well. And I will tell you a bit later which lessons can be drawn from such an event, basically. The title of my speech today is what to expect from European banks going forward. I think that's a very wide subject, and I will tell you about what I think should be the strategy of UniCredit and how we came to the definition of strategy of UniCredit, and then what we did in order to put together our capital increase, which was relatively large. And putting things in perspective will allow me to go from a vision for banks and European banks in general towards UniCredit. And at the end, I'm sure that you might have some questions which I will be delighted to answer. So first, what is the vision, or what can we expect from banks? It is something which has to be put in perspective, and I was mentioning, the sad event which happened at Société Générale. But starting from 1987, when we had the change in the regulatory environment and the liberalization of the market, banks moved from being deposit taker and credit providers to their client to be extremely leveraged entities benefiting from very cheap access to liquidity on one side and ability to grow their balance sheet to extreme on the other. So by doing that, you increase the profitability, quite a lot, using derivative, for instance, or, using all the capital markets on the other side. And by doing that, you reach profitability which are extremely high. And I remember one of the, it was one of a quarterly result of SocGen was in 2007, I think, in the first quarter. I mentioned during the quarterly call, I think the return on equity of the corporate investment bank will be, around 30%, going down from 45% to 40%. Then the market went down 2 or 3%. I mean, and Daniel Bouton, the chairman, called me and said, "Why did you say that your return on equity will go down to 30%? I said, "Because I think it's the truth." He said, "But you shouldn't say that." I said, "But 30% is already very high." And then analysts were telling us, 40%, what can you do to keep 40%? And one thing which is important with human beings, they don't understand what is exponential. And I'm sure Patrick can teach you a lot about exponential, but human beings are pre-programmed to understand what is a linear evolution, but not an exponential evolution. And for that, I advise you to read a very good book which starts with that, which is called The Second Machine Age, if you want to look at the evolution of the world and the impact of technology. And they start to explain to their readers, this story about this emperor, or so-called emperor 2,000 years ago, who was playing chess with a farmer. And the farmer won, and the emperor said, "What can I do to reward you?" And the farmer said, "Well, don't you put a grain of wheat on the first box of the chest, then 2 grain on the second one, then 4 grain on the third one, then 8 grain on the next one." And the emperor said, "But it's not enough." And the farmer said, No, please do that. At the end of the chessboard, the grain of wheat cover a football field. At the middle of the chessboard. At the end of the chessboard, they are equivalent to Mount Everest, because exponential 2 goes very, very quickly when you go through the 64 case of the chessboard. And so human beings don't understand exponential, and the poor farmer was beheaded because the emperor was very pissed off that the farmer made fun of him. And I think that we don't understand exponential, and we don't understand that, for instance, if banks have a return on equity of 30%, or 40%, it was the case at the time, for 10 years or 20 years, if you compound that, you end up having, if you look at an average index, for instance, where normal industrial companies have a return on equity of 10% and banks are at 30%, you compound the difference in terms of market cap and profitability, and you end up 20 years from then having banks representing 98% of the index and the rest 2%, which means that there will be only bankers and lawyers, because lawyers are a side product of banks in the world. So, but by not understanding exponential, analysts predict that you need to keep a 30% return on equity forever, which is clearly a mistake, and which happened to be a mistake, as you have seen. And the natural force of gravity, one way or another, call that financial crisis, but it's not really a financial crisis. It's just an adjustment to reality. The financial crisis was not a crisis in itself. It was just the market going back to what it should be, which means that banks on one side need to take deposits, on the other side need to lend money, and stop over-leveraging their balance sheet and worry about the reality and the gravity. And when you worry about the reality of the gravity, you can avoid a certain number of issues, and you can define what is your bank strategy. If you think that by leveraging your balance sheet, you're going to be able to deliver high-quality revenues which are going to be sustainable, you're completely wrong. It does not work. It cannot work. It's the law of nature. So any bankers, any CEO of bank who say 15%, 20% of return on equity, that's what we're going to do, are either idiots or liars. It cannot work. So what did we do for UniCredit? We just look at the law of nature. You cannot deliver a return on equity over time, which is over the average return on equity of the market. It is impossible. I'm saying over time, on a sustainable basis. It does not work. Just compound the profitability. So what should be the right bank strategy? It is to be a bank which take deposit and lend money. So when we look at UniCredit, we define to investors, but first starting to our team, what should be our bank strategy. And the best way to define a strategy is actually to define what you want to do. Usually when I meet people say, what is the strategy of the bank? They don't ask that anymore because they know it. But when I came back to UniCredit, and you need to define what you do. That's a simple way, and then people say, okay, I understand. And you need to define that in simple words. If your strategy takes more than one sentence, you lose people. They don't remember. So, we have a strategy for UniCredit, which is very simple. We want to be a simple, pan-European commercial bank. Simple, pan-European commercial bank with a unique network in Western and Central Europe and a plugged-in corporate investment bank. Simple, pan-European commercial bank because simplicity is what counts. Simplicity means you go back to the roots of banking. You forget about leveraging your balance sheet. You forget about delivering returns which are massively higher than the normal market return because that does not work, and it has been proven. Commercial bank, because commercial banks are simple. Within UniCredit today, we have 14 different banks in 14 different countries. How much time do I take to look at the performance of each bank? Much less than the CEO of a complex bank does to look at the performance of its structured credit derivative book. Much less. The CEO of a very large German bank asked me about, structured credit derivative, what do you think about it? I said, I don't think anything about it because I just closed the business when I was at UniCredit initially and stop it. It does not work. It does not make any sense. Structured credit derivative leverage your balance sheet by 20 times. Do you want to have a 20 times balance sheet for a product? No, you don't want to do that because that does not work. Leveraging your balance sheet in a massive way does not work. It is against the law of gravity. It worked when nobody cared about leverage. It worked when nobody cared about liquidity. It does not work in the current environment because the regulators understood and they just constrained the bank. It takes half a second when you discuss with the regulator to understand that you have to follow a very simple strategy. And BC of the bank was spending a lot of time to understand his structured credit derivative business. How much time do I need to understand the bank in Serbia that we have, or in Russia, or in Turkey, or in Austria, or in Italy, in Germany? 30 seconds by bank. I have a certain number of KPI. They are clear, simple. Commercial banking is simple. You take deposit and you lend money. It's not much more difficult than that. And that's it. And afterwards, we manage the bank. Simple, pan-European commercial bank with a unique network, because our network is unique. We are the second largest commercial bank in Europe. We lend more than 400 billion euro to European corporate clients. It's a lot of money, 400 billion euro. We are the second largest because we lend money to companies in Italy, in Germany, in Austria, in Central and Eastern Europe. They don't need capital market to refinance themselves. They are too small to access the capital market. They need banks. That's very good news for us. They need our money. And we have a lot of capital. I raised 13 billion euro, and I come back to that. And they need us for transaction banking. They need us for export finance. They need us to hedge their forex risk. They need us to hedge their interest rate risk. So they need us. To find a corporate client who needs a banker is wonderful. Clients love me. They want to meet with me. Clients love their bankers. I went to an event in Italy when I came back to UniCredit, for a client which is operating in Tuscany. He was inviting all his suppliers. They all told me, we need UniCredit. We love UniCredit. We love the bank. Because entrepreneurs, they need their bank. They need their banker. Without their bank, they cannot do anything. So when you're a simple pan-European commercial bank, you're actually loved by your clients. And your client gives you back in return profitability. Lending money and doing transaction banking is actually a very profitable business. Profitable for two reasons. One, in itself, we have a return on allocated capital which is very high. Two, our costs are very low. Why? Because I don't have bankers in suspenders, being paid a lot of money, who are going to basically get the money for them and not for our shareholders. My cost income on the CIB side, the lowest in Europe. The lowest in Europe. Why? Because when I was at UniCredit, I cut everything. I cut all the businesses which were too expensive. I arrived to UniCredit, people were telling me, very important to have equity capital market and equity research. We need to develop the franchise. I say, yeah. How much did we lose? 70 million euros per year. all the French banks are losing more or less the same amount of money. I'm not, do I want to keep a business which is losing 70 million euros per year? No, I don't. What did I do? I cut the business, and I gave the business to Kepler. Kepler is an independent broker. They were looking to develop the business. I saved 70 million euros, and they do the execution for us and the research. So I originate deals, and they execute. Kepler is a business which is independent. So they don't ask for what is the bank commitment. Because when I spoke to this guy, hey, we want to develop our research, but we want to show what is the bank, to know what is the bank commitment. When an employee tells you that, it means I want to have a guaranteed bonus and I want more money. And the bank commitment is that. We just cut it. Okay, this guy just went away. And Kepler, they don't need the bank commitment. It's their own money. They are partners of the business. If they don't make money, they are not paid. So that's very simple. So we simplified the business. Today, Kepler, having bought Chevreux, or merged with Chevreux, is the largest independent broker in Europe. They have, and they cover more stocks than Goldman Sachs. We did the capital increase of Deutsche Bank a few weeks ago. Kepler was the second most active broker to support the Deutsche Bank issue just after Goldman Sachs, well ahead of Credit Suisse, which was one of the global coordinators. So by cutting the business, by simplifying, by finding different ways to develop the activity, one, we're more efficient, two, we're simpler, three, we deliver a much better service to our clients. So the strategy was very simple. Simple pan-European commercial bank with a unique network and a plugged-in CIB. Our corporate investment banking business serves only our clients. No development in the US with US clients to try to make more money. No development in Asia where we have a zero competitive advantage. No development in Latin America. No development in Africa. Just to support our client. And that's it. And we simplify and we cut costs. And that's it. And in the future, banks are going to make money because commercial banking is very profitable, but you need to manage your cost base. That's it. That's very simple. So having defined the strategy, then we needed to work on what were some of the issues of UniCredit. And when you look at UniCredit at the time, in July last year, the picture was very clear. The bank had a risk and a non-performing exposure which was very high, equivalent to any other Italian bank. So you measure the non-performing exposure by looking at the ratio of NPE, non-performing exposure, to total loan. 15% for UniCredit, 15% for Intesa, another small Italian bank. And when you look at Société Générale, BNP, or Deutsche Bank or others, their NPE ratio is around 5%. So basically, our NPE ratio was 3 times higher than our other global SIFIs. We are a global SIFI. The other global SIFI have a risk profile which is 3 times better, if you want. So, a very obvious thing was to say we need to make sure that we adjust the risk profile of the bank because having such a risk profile is a problem. At the same time, our profitability was quite low. I mean, of course, the risk and the provisions were quite high, but the cost income was relatively high for what we were doing, and our profit was quite low. So it was very clear that we needed to cut costs as well. So reducing risk on one side and cutting costs on the other were the two things we needed to do. That was very simple. So you don't need to spend a lot of time to define the strategy of the bank. You need to have a vision, and the vision is clear. The regulators are pushing to be simple banks. So just don't do it. If you don't do it, you go against the regulator. If you go against the regulator, you lose. So we go for a simple bank. We reduce the risk. We reduce the cost. That's the strategy. No more difficult than that. Then we looked at what to do, because when you do that, you have some costs. You have costs for provision for credit risk, because you have to reduce the risk profile and you need to sell assets. And you have costs for restructuring, because you don't ask people to go if, by not paying anything and not behaving properly. So, when you look at the debit side, the need for capital, for provision, for credit, for restructuring, plus the need to reach a capital level which is high enough, trying to have, and the bank had a very low capital level, around 10.5%, actually 10.3% CET1 ratio. I mean, that's too low. That's too low, and you need to have a higher capital level to have a buffer against a negative headwinds. So when you look at all that, we needed 20 billion. Market cap was 13, actually 11.5 when I came. So you have 20 billion need and 11.5 market cap. That was the equation to solve. So what do? First, you define the strategy. 2, you define what to do, but you need to find 20 billion. So to find the 20 billion, it's not very difficult. I didn't want to raise more than 13 billion. Actually, I told the team no more than 12. I felt I could do 13, which was more or less the market cap of the bank. We could do more, but doing more will be extremely dilutive for the shareholders and could represent a risk if we have a tailwind at the time where we raise capital. Tailwind can be anything, can be political problem, it can be a bomb somewhere, it can be whatever. So 13, which was twice the market cap of the bank, or equivalent to the market cap of the bank, was more or less the maximum. And in the market, well-informed people were saying, no more than 4 billion. With 4 billion, that's enough. Okay, well-informed people can be not so well-informed at the end. So, but 13 billion in the market, there's still a gap of 7 billion to go to the 20 billion. So how do we do that? We do that by selling assets. And so we decided and we looked at what should be the strategy for us in order to sell assets. If we sell assets which are strategic for the group, we have a problem. My simple pan-European commercial bank with a unique network and applied in CIB does not stand anymore. So I need to have consistency with the strategy, while at the same time selling assets. First asset to sell is our asset management side. You remind everybody that I was originally at the creation of Amundi, and the bank, against what I advised them to do when I was still with UniCredit, initially decided to go into a transaction with Santander to sell the asset management side, or actually to combine the asset management side of UniCredit with Santander. The problem is Santander doesn't have an asset management company. It has a collection of things which cannot be called an asset management company. And the bank entered into an agreement to sell the asset management company for 2.7 billion. I stopped the transaction because I had a way to stop it. And I opened up a competitive bid. Instead of selling the asset management for 2.7 billion, we sold it for 4 billion. It's just 50% more. 1.3 billion euro is a lot of money. A lot of money. And when you need to close the gap of 7 billion, to sell your asset management for 4 billion is actually quite important. And we did that by running a request for proposal, by asking various bidders to come, and by making sure they knew that the other one was extremely keen to do the transaction, extremely keen. I was hoping to get 3 billion, frankly speaking. We went up to 4. That's it, c'est la vie. And it was Amundi buying it, and both the share price of UniCredit and the share price of Amundi went up when the transaction was announced because it was good for both institutions, which is good news. And by having a very strong Amundi with our asset manager Pioneer, we have today the first asset manager in Europe, the 8th in the world, with 1.3 trillion euro of assets. In asset management, in Tikehau, which was the firm where I was partner, we are very specialized, and they are very, very good. If you look for a job, go and work for Tikehau. They are really, really good in asset management. But they are very specialized. They manage 10 billion, and we manage direct lending, credit for mid-market companies. When you're really good, you can be very focused. When you become big, if you're mid-size, like Pioneer Asset Manager with 180 billion, you're too big to be a retail asset manager. You're too small to be an institutional asset manager. So you're in the wrong place. So something needed to be done. Didn't want to grow and spend money to grow our asset manager. People say, but it's commission, it's very good business, it's commission business, doesn't use capital. I say, yeah, but it's a strategic dead end. If you don't have 1 trillion in asset manager, you're dead. It's very, very clear. Okay, so we sold it. Now we have the best offer for our clients ever. Much better than anybody in Italy, in Germany, in Austria, or in the seaside, because we have the first asset manager in Europe to give us all the product. And I keep the distribution fees. I keep part of the management fees. So for my business, it's actually very good. I keep the fees, but I don't have the risk of managing the product. So people are saying, why do you sell the asset management? It's a strategic mistake. I say, no, it's not a strategic mistake. You never manage an asset manager, a small one like I did with Tikehau, which is very good, or a bigger one like SocGen Asset Management. So you need to find the right strategy. So we sold the asset management side. Then we needed to close the gap with others, and I decided to sell our Polish business. If you look at Poland, and if you go to Poland, in Italy, people say there is more bank branches than pizzeria. In Poland, there is more bank branches than anything else. The market is overbanked. And our Polish bank was trading at 1.4 times book value, when our bank in Italy, our holding, is trading at 0.3 times book value. You don't need to have followed the course of Patrice Poncet to understand that between 1.4 times book value on one side and 0.3 on the other, I mean, there's a financial logic to do that. But it needs to make strategic sense. And today, I do feel that Poland is coming to the peak earnings for Polish banks because there is too much competition. Probably peak earnings as well because the environment locally in Poland is not very good for foreign banks. And I will not comment more than that because it's a public meeting. So we decided to sell our Polish bank for this reason, which helped us to close the gap. Plus, we sold part, but we maintain consolidated, of the equivalent of what you have in France with Boursorama, for instance. We did the online broker of Société Générale. So we have a very, very good company called Fineco, which is the leader in Italy. And so we sold just to make sure that we can reach the 13 billion. So by having decided the transaction on the capital side, needed to see what could be done on the risk side, because by plugging the gap for the 20 billion, need to make sure that I can show to investors that I can de-risk the balance sheet. And there it was a bit difficult. So we looked at what do we need to do, and it was very clear that we needed to take roughly 8.5 billion provision. 8.5 billion is a lot of money. Our market cap at the time was 11. So, it's 80% of our market cap. It's a lot. But taking provision is not only what needs to do, because, investors say, is it the right level? So I told the team, we need to prove to the market that the provision we're taking are the right provision. What is the best way to prove that? Is to sell the loans net of provision. So I told the team, we need to do a big transaction to prove to the market that what we are doing makes sense. And so we went into a transaction which, unfortunately, was called Bastilia, for Bastille Day, because we decided to do it on the 14th of July. And after what happened, the terrorist attack in France, we decided to rename the transaction, which was appropriate, and they called it FINO. And so I said, FINO, why did you come up with FINO? He said, well, because FINO is the acronym for failure is not an option. So I said, yes, that's a good thing. And, and they called the second transaction Porto. And then I was completely lost. I said, FINO, I can understand. Porto, don't understand. They're going to say, you're not Italian enough. It's because Portofino. So then I said, okay, I understand how you can get the strategic name for the transaction. And so FINO, we looked at the non-performing exposure in Italy. So we have in Italy, just on our Italian balance sheet, we have 37 billion of bad loans. So bad loans are not the unlikely to pay. Bad loans are really bad loans. They just are, beyond any hope. And so we looked at the 37 billion. We carved out the loans which can be sold. So the loans which can be sold are the loans where we have the proper information and the proper loan tape, as we call it, in terms of the borrowers, the characteristic of the loans. We carved out a 17 billion portfolio. So we're going to sell a 17 billion portfolio. It has never been done in Europe. Of course, never been done in Italy. 17 billion is a very large bad loan transaction. When I'm saying very large, it is very, very, very large. And I wanted the deal to be done before the investor day that we decided to have in December, at a date which was fluctuating because we had the Italian referendum, so we didn't know exactly when to have the investor day, and we wanted to have the investor day 1 week after the referendum because we didn't know what will be the outcome. And if the referendum in Italy was no, we said we will be in a terrible situation because with a yes, we can do our capital increase. With a no, it's impossible. So we said, let's wait and we'll see. So we worked on the FINO transaction. There, like for the Pioneer deal with Amundi, we put a lot of potential bidders and we just made sure that they can go up the palm tree, and we grew the palm tree, so they were grimpés au sommet du cocotier, as we say in French, in order to push them to bid more. And we signed the deal in the morning of the Capital Market Day. At 5 o'clock in the morning, we were presenting to investors at 9 o'clock, and we changed the characteristic of the deal at the last minute. Initially, I said I want to sell 20%. Then the bids were coming, and I said, well, we're going to sell 51%. And so we renegotiated everything overnight, and we changed the presentation. We said, no, it's not 20%. There is so much market appetite that we're selling 51%. So as you can see, things were a little bit tight. So having decided the strategy, what to do to close the gap in terms of capital, what to do in order to make sure that we reduce the risk profile of the bank, we need to raise 13 billion. So I asked a few banks, and was at JP Morgan on Monday, and to meet some of our bankers to discuss a few things. And I was in a room where the banker, it's actually a French person, Isabelle Cellier, wrote me a highly confident letter in October 2016 saying JP Morgan commits to raise 15 billion euro for UniCredit. Because I said 13 is not enough, you need to commit for much. I can do that. I said 15. So they were there and they said 15. UBS said 15 and a few other banks, one other bank said 15. Because I needed to have this backup in order to go to my board and say, we have the backup of banks, we can raise the money. But my board was that completely, 15 billion or 13 billion, that's a lot of money. So are you sure you can do it? My board was extremely supportive on all the transactions. But when you're a board member, you have to, it's a leap of faith. Can you do it? Because if you cannot do it, it is a problem. And so the banks were supporting us. And we now had to devise the strategy, how to explain to investors what we will be doing. And that's a little bit complex. So we decided, and Louise, who is here and came with me, was and is still our strategic consultant and advisor us on the way to sell the transaction and on the way to devise the strategy. The strategy, I decided it, but we needed it to put in place and make sure that we had all the team buying up the strategy. Because if I decide the strategy, all the management members of the bank need to buy it in. If they don't, we cannot put it in place. So we spent from September, started in September to the end of October, mid-November, to work with all the team members, with all the business heads, to tell them this is what we want to do, this is the target we'd like to have, come back with proposal, and let's see what we can do, and let's try to make sense of it. And so it was a bottom-up work in order to have everybody in each of the activities we had, commercial banking, Italy, Germany, Austria, CE, the CIB side, all the support function, the operation, the IT, etc., just to come up with a strategy where we could define what to do. And then we have to present what we want to do, and we have to present it in a proper way to the team internally, beyond the management team of 12 people, and to the investors. So we defined 5 pillars in order to articulate our strategy, and we made sure that all the presentation and all the work done by the team were completely consistent across the pillars in order to have a presentation which was making sense. So the 5 pillars, one was to deal with the capital need, the other one was to deal with the risk side, etc. And so by doing this work, which was bottom-up work, and afterwards formatting what we could do, we worked on the capital market, and we said we need to speak and to show investors for one day what we do, starting with the strategy, and afterwards going back for each of the businesses to explain to investors what was behind the strategy. Because you don't raise 13 billion by telling investors, I need 13 billion. You really need to convince them. So it was a huge amount of work and consistency and credibility to do that with all the team. And it could not have been done without having the right strategic support in terms of communication. And communication is substance, it's not form. It's nice to have nice slides, but the substance was extremely important to make sure that investors saw that what we were doing was actually making sense everywhere. We came into the 13th of December, which was the day, 13th December, which was a lucky day probably, after the no in the referendum. But the no in the referendum actually turned out to be a good event in Italy as the market realized that it was not the catastrophe to be expected. And we started the presentation saying, look, we're going to take 8 billion provision, we're going to show a 13 billion loss, and we're going to raise 13 billion. These are really, really big numbers. We're taking a loss which was bigger than our market cap. When everything goes well and, okay, it's done, say, okay, that's fine. To make the decision to take 13 billion loss and to make the decision to raise 13 billion takes some guts. Not from me, but from all the management team, and more importantly, from the board. You need to believe that you're going to be able to do that. And my chairman was absolutely wonderful, and the board members were absolutely extraordinary to support the strategy and to support the management team to do that. It takes a lot of guts from the board to do that, a lot of guts. You need to be extremely courageous to do that, and you have to have a lot of trust in the management team. Easy to say afterwards, very difficult before. And when I'm saying very difficult, very, very, very difficult. And I was lucky when I was young, you didn't mention that, to be a paratrooper in the French army. And when you're a paratrooper, and I did 600 jumps, which helped me to put a perspective in life, you understand how to deal with problems and how to deal with stress and how to deal with issues. And I have to say, unfortunately, that the Kerviel experience was as well a way just to deal with problems, with issues, and put things in perspective, and see how you can turn around a bank which has a massive problem. And Société Générale at the time had a massive problem, and Frédéric Oudéa did a wonderful job. And here we had a massive problem, and you need to be calm. You need to make sure that you can lead the bank. You need to make sure that you reassure the employees. You need to make sure you reassure the staff, but also the clients and the investors. When you say, we lost 13 billion, don't expect people to say, yeah, good idea. The clients can be completely scared. The staff can be completely demotivated. The shareholders can run away. So you need to do things in a proper way in order not to lose anybody. Otherwise, it's a catastrophe. And when I say a catastrophe, it's the end of the bank. But it's as well probably, it creates a little bit of a shock in the financial system. So we were backed as well by the regulator and by the ECB. And it was very important to have their backing as well in what we were doing. And so on the day of the Capital Market Day, our share price went up 16%. Not bad. A day when you announce 13 billion loss and 13 billion new capital call, your share price is going up 16%. I did not expect that. I was expecting the share price to go down by 10 to 15%. It went up by 16%. It went up by 16% because investors saw a few things. They said, okay, they are taking the right actions in order to turn the page in terms of risk, in terms of cost. So what they are doing is fine. The share price and the bank was trading at 70% discount to tangible book. Say, okay, if we believe the plan, as they are taking the right actions, if the profitability and the return on equity they define is around 9%, the discount to tangible book should narrow. To what level, I will not comment about it because I don't want to comment about where our share price should go. But if you assume that our cost of capital should go down because we are less risky, and if you assume it should be single digit, and if we deliver a 9% return on tangible book, you can guess what should be the discount to tangible book or the premium to tangible book. And so the share price went up, and so far investors have been right, but it's a long journey because doing financial transaction, it can be done at the speed of capital market, which means very quickly. Turning around the bank, transforming the bank, changing the processes is quite difficult. So changing the process is what? We said we will cut costs by 1.7 billion euro on an annual recurring basis, 1.7 billion euro. That's a lot of money. We said that we would cut staff by 14,000, that we will cut 944 branches. If you say that in a French bank today, the bank stops. The union rip apart the CEO, the CFO, and it's impossible to do it. We did it without a day of strike, with the full support of the union and the full backing of the union in Italy, in Germany, in Australia, and the CE side. We did it because we discussed with them, we showed them the plan, we explained the rationale, we negotiated, we gave in to some of their requests, where we did that in a very adult way in order to make sure they understood what we're willing to do. And we did it in another way as well, which is that when you manage a group, you have to lead by example, in terms of discipline, but also in terms of ethic. And so what I did for the union first, I said, okay, my salary at the time was public, and it's still public, was paid 2 million euro salary. I said, I'm going to reduce and cut my salary voluntarily. And we discussed internally, should I cut it to 0? Should I cut it to 50,000 euros? We said, okay, we need to cut it by 40% because doing more than that, and I was willing to do more than that, it was necessary, would not have been appropriate for various reasons. So I told the union, look, I'm cutting my salary by 40% to 1.2 million euro. It's still a lot of money. I have no bonus, of course, and no bonus for the duration of the plan, nothing. And if I have to have a variable remuneration, it should be through a long-term incentive plan, only if we deliver on 3 metrics of the plan: the return on equity of 9%, the cost income of 52%, and the reduction of the net non-performing exposure to 20 billion. And so by having a long-term incentive plan, which for me is 7 years, so I will not be paid and have no variable remuneration for 7 years, which is a very long time. On one side, managed to make sure that the union saw that what we were doing was ethical and proper, and the management was leading by example. I urge you to look at what happened with some Swiss banks recently about their management remuneration and the shareholder revolt. And we did that by as well aligning our interests with shareholders. And one of the reasons why a lot of shareholders came and subscribed to the capital increase was because of my salary cut and my long-term incentive plan. They said, if you do that, you believe in the plan and we believe in you. And that was an extremely important thing to do. Important for the staff, because staff now says, okay, he's leading by example, he says what he does what he says. Important for the union, important for the shareholders. And so, we now are progressing and are trying to make sure that we can have the buying of all the staff, and the staff is buying it in. And then when you have such shock to the organization, you need to make sure that, you show to everybody that the team is working together and working as one group in order to deliver. And one of the subtitle of our plan, Transform 2019, is One Group, One UniCredit. For various reasons, very important for us to make sure we don't appear as 14 banks, but as one bank. But for the capital increase presentation, wanted to make sure that we can pass a message to investors that it was the team, the management team, which work on the plan. If it's a plan which is designed by the CEO, with no buying of the team, investors are not going to put their money at work because they don't know if the team will just execute and operate the plan. So I told the team, look, we work together. Which kind of signal can we pass? And when I rejoined UniCredit, I started to wear red ties because red is the color of the bank. So, from the 1st of July last year, I changed all my ties. I had no red ties, so I changed my ties and I wear red ties. I told the team at the suggestion of Louise, why don't we all wear red ties on the Capital Market Day? It will be a subtle sign to everybody that, we're working as one team. Investors noticed. They noticed. Say, oh, you're all wearing red ties. Say, yeah, because we work as a team. Say, okay, you work as a team. We believe in what you're doing. To raise 13 billion euro, from time to time, you have to pay attention to detail and you have to convince investors that, you looked at everything from your own remuneration to make sure that the team is working together. But it's not enough. We need to create internally a feeling of belonging, a feeling that, we're going to deliver. And for that, we had Elcat. And I'm going to introduce Elcat to you. Elcat is our mascot. It's our Porta Fortuna. I needed to define what was the code name for the capital increase. And, you have, code names. There was a very good article in the Financial Times from Lucy Callaway, I think 2 weeks ago, about, the hubris of investment bankers who define, the revenge of the Jedi, the whatever for the code name of their transactions, so which are very flamboyant. I decided to have Elcat because one of my friends had a small elk, and we said, okay, let's find a code name that nobody will understand. So an elk is an elk, an Elcat is a legal elk, basically. And so we told the team, look, it's our Porta Fortuna, as we say, our good luck charm, our mascot. And I introduced Elcat at the Investor Day. At the end, I told the investors, look, we had a good luck charm, and that's Elcat, and I would like you to meet Elcat. Maybe it was a bit dangerous when you want to raise 13 billion, to introduce Elcat. But since then, we have ordered 3,000 Elcats. Because, of course, all the team members at UniCredit, and we have 7,000 Elcat, all the team members want to have their own Elcat. Because for them, it's important. Over the weekend, I received 2 mails. One from a lady working in a branch, who I never know, and she sent me a mail saying, I'm really sorry, and I don't know if I should have been sending you this mail, but I wanted to send you a picture of my Elcat. And she sent me the picture of her Elcat, with a small elk like this one that we give to staff, with a red ribbon. She said, she's with me during the day, and she helped me deal with clients and do my job better. And then you have the buying of the team. We had one Elket which climbed Mount Everest because one of our team members had the Elket next to his belt, basically, to take it to Mount Everest. So Elket can go and conquer summits. Elket was photographed with President Hollande, with the head of the central bank, with former Prime Minister of Italy, and other very famous people. And just know with Patrice Poncet, who's probably the most important person Elket was ever photographed with. And so, but why did we have Elket? We had Elket to tell people and the staff, we do things seriously, but we don't take us seriously, and we have a human side. So, we're asking you to do something which is extremely hard. We have to cut 14,000 people. It's 14% of the staff member of the group. It's 20% of the staff in Western Europe. 20%. Now, when you cut 20% of the staff, it is socially difficult. It is socially very hard. How do you make sure that the team members are going to work with you? How do you make sure that the people in the network are not going to stop working and saying, that's it, I don't want to work here? Instead of that, people during the capital increase, during the day, were sending us mails and text messages saying, UniCredit is back, we are proud to work for the bank. Okay? And this human side was actually extremely important, as important as the financial side. And then we had to go on roadshows to sell the capital increase. I met 751 investors during 28 days, during 121 meetings, myself. When you do 121 meetings, saying 121 times the same thing, answering 121 times to the same question, trying to show the same enthusiasm about the bank, it is a little bit boring and tiring, but we needed to do that. And you can look at it in a different way. You divide 13 billion by 121, you're more or less at 120 million per meeting, so it's 2 million euro per minute. It is worth doing it for 13 billion euro, okay? And for many people, it is a good return on a minute use, basically. Okay, so we did that, we convinced investors, and now we have the most difficult thing to do, which is to implement the plan. So to keep all our team members motivated, to keep our client motivated as well, to work with us, to demonstrate that we are the bank to work with them, and to make sure that with the team members, all the team members everywhere, we are going to deliver. We did some internal roadshows to explain the transaction to our team members. Recently, I went to Austria. And, of course, in the bank, everybody now is wearing a red tie. Not only the management committee. I have meetings in my office. People all come with a red tie. If bankers from the outside come to my office without the red tie, I throw them away, okay, because that's impossible. And so, and afterwards, if they go and see our competitors, they know they came to see us because they have a red tie, okay? But that's, so everybody wearing a red tie. I went to Austria to make a presentation. We had 200 staff members there. 150 men and 50 women. That's more or less the ratio. I know we are not yet at target of parity. All the men were wearing the same red tie, and the woman had a red scarf. And I was very touched. I was very touched because it showed that in Austria, the team is working as one team in order to deliver. They believe in the strategy. We cut 20% of the staff in Austria. It's very painful. But they are all in for it. And they want to show internally, but also to our clients, that they are UniCredit, they perform, they deliver. And today, the ability to deliver on the bank is not to have the best transaction. It's not to have the best derivative model. It's not to have the best strategy. It's just to make sure that the team members will implement and we deliver that we promise to our shareholders. So it's a management challenge in terms of motivation and in terms of doing what we said we would do, and for investors to keep working with us. And they are waiting for the first quarter to make sure that we can show them what we are delivering. So that's a very brief story of the genesis of a transaction and what we did to raise 13 billion euro. And now I'm very happy to take a few questions if you still have time. Thank you very much.
I think you spent most of your career in a French bank, right? And you're French?
No, one can say that, yes.
So I want to know how it is to work in a culturally Italian bank. How was that easy to adapt to the corporate culture and the Italian culture?
Yeah.
So if you can
first of all, UniCredit is a European bank. We are the second largest lender to European corporate. We own the first bank in Italy, the first bank in Austria, the third bank in Germany with the Bank, and we are the first bank in Central and Eastern Europe. So we are headquartered in Italy and very proud to be headquartered in Italy, but we are truly a European bank. And this is important because in the management committee of the bank, not everybody has been graduating from Polytechnic. It's a breath of air, basically. And we have a lot of different cultures, different nationalities, and different approach to business and to risk. And I think that this diversity, which is cultural diversity, looking at the passport and the culture, is actually extremely important in order to make sure we progress. It is something which is not very easy to manage because, of course, people feel Italian or German or Austrian, so you need to go beyond the nationality or the way to work. The Germans plan everything. The Italians do things usually at the last moment. So you have to make sure that you can combine that. But, Italy works as good and as well than Germany, but it's a different way of handling things, and we do that. And what we do is something which is very interesting. We have 14 banks. People are very clever in the bank, and so there's always a good idea somewhere. So, we have the best practice sharing that we share within our management committee. And, at every meeting, we find the best practice, which is developed by a team in Bulgaria about credit cards, or a team in Turkey, or a team in Austria about transaction banking. And then we make sure that it can be used and developed everywhere within the bank. So we use the diversity of the bank in order to make us a much stronger bank, and that's unbelievably powerful.
When you had to cut costs, and you're a very good cost cutter, did you feel pressure so that the cuts were homothetic, proportional to for each country?
No.
No?
No.
They didn't care if, let's say, 20% for Austria versus only 10% for...
We ended up cutting as much as possible, and the limit is actually 20%. But the pressure was not save the jobs here, is, how can we cut costs? And, I don't like cutting costs, but, it is, actually cutting costs was not the purpose. The purpose was to transform the bank. This is why our plan is called Transform 2019. And one of the consequences, by optimizing all the processes, that we can release full-time employees and redeploy them toward the client. Actually, we have more employees covering clients at the end of the plan than we have before, and let some people go in early retirement mostly, which is socially acceptable.
I want to ask you a question about American banks. They seem stronger than ever, especially compared to EU peers. Mm-hmm. They gain market share in very different markets. Do you think there is a consolidation in the future possible between American banks and European banks?
No.
You don't think?
No. No, don't make a mistake. American banks are very good, and we had a lot of American banks in our capital increase. I have to say that the quality of the service they gave us is much higher than what we got from European banks, because they have better access to investors. They are a better team in terms of the equity capital market side. So, there was a real gap, which I see within our corporate investment banking business as well, when I compare to what we do to American banks. But they don't compete with us. We lend 400 billion euro to European mid-market corporate clients. American banks don't work with European mid-market clients. We work with European mid-market clients on their equity capital market transaction. They are not interested. We do capital market transaction, debt capital market transaction in euro. We are much better than them because we are very, very focused on the euro. We don't do yen, we don't do sterling, we don't do whatever. We just do euro, and we are the top 3 banks. Or in euro, we were the top bank in syndicated loan in euro. Why? Because we lend 400 billion to European clients, so we kind of understand a little bit the syndicated loan market. So European banks don't compete with us in what we do. They don't compete with us in transaction banking. They can't care less about it. So they compete with European banks who want to compete with US banks. So they compete with Deutsche Bank. Good luck to them. They don't compete with us, and we are very happy, that they are here to serve us, and that's it. So US banks probably not going to buy European banks. I cannot see the strategic rationale for that.
As we are seeing these days that S&P 500 is rallying again. So you just mentioned that in 2008, basically the markets were mean reverting because they were overvalued and they had to crash. So do you think there's a similar scenario right now that the markets are rallying up and there's some possibility of complexity being created in the markets right now?
I think the environment is very, very different from what was happening in 2007 and 2008. The regulators did a very good job. I mean, everybody screams about the regulators, but they did a very good job to force banks to deleverage and to force banks to go into a more, traditional and simpler business model. So, I cannot see in banks, a systemic risk building up because of over-leverage or over-lending and whatever. So, I think that the environment is actually quite fine. Of course, if you have a view on the equity market, and I have no official view about the equity market, one can say the US too expensive versus Europe, etc. But that's a tactical issue. Market correct one way or another. Maybe the monetary policy will change, but we're not going to have an impact in terms of the financial crisis that we had in 2008. No, the regulator did a very good job, and banks changed a lot.
The amount of NPLs in Italy was huge and is still quite huge, because the amount is something like 300 or 400 billion euro.
Yeah.
And what is the explanation? How the Italian market ended up with such an amount?
Because of non-performing loan,
yes, because we discussing about solution, but there is no real explanation. Why?
Yeah, no, there are very clear explanation.
Okay.
It's Italy went through a double dip because the government of Mr. Monti decided to have an extreme tightening of monetary policy, so which pushed the economy to a double dip. And Italy is still 10% below, in terms of GDP level, 10% below the top of the GDP of 2008, while all the other economies in Europe, I think Spain is now are above 2008 or 7. So when you go through such a massive shock, a double shock, your level of non-performing loan is unavoidably very high. So when you say it's very high, actually, everything else being equal, it is not very high, and for two reasons. One is the Italian government never rescued any Italian banks. The German government rescued German banks and put a lot of money at work. The Spanish government did, the Irish government did. So there has been massive government intervention to support the banks, and the British government did. The Italian government never did anything. So there has never been any public money up to a month ago to support Italian banks. So Italian banks had to adjust that. When you look at the true level of non-performing loan, which are the bad loan, they call that the suffering loan, they call that the sofferenze in Italy. Actually, the net level, net of provision, is around 70 billion. So it's more or less 2 points of GDP. It's okay. What I'm saying is 2 points of GDP is not the end of the world, basically. So it can be dealt with over time. So what was important the government did, and they did very, very well, is they decided to allocate 20 billion to save some of the systemic banks in Italy, Monte Paschi, which has been saved by the government, and probably the two banks in the Veneto region, which are Monte Paschi is nationally systemic, the two Veneto banks are regionally systemic, and they are large banks in the region. And so by doing that, you avoid a systemic shock to the system, and which is important. You keep customer trust, and so we are going to go through normalization of the level of NPL, and the risk profile or the risk premium for the Italian banking sector should go down. But it's a fully manageable situation, even more manageable because we showed that at the right price you can sell loan, and there's a huge appetite for non-performing loan. We sold 17 billion to US investors, so you can sell the balance to various investors. So it's manageable. Patrice?
Yeah, I have a somewhat technical question, actually two relative to interest rates. First one is, when you took over, you mentioned a lot of risk, essentially default risk, but you also have, as a bank, an interest rate risk when the duration of your assets is not equal to the duration of your liabilities, right? So did you face that kind of risk, and how did you deal with it? And the second one, also related to interest rates, is how do you see the future with, let's say, probably continuing very low level of interest rates that squeeze your...
Now, of course, we look at the sensitivity of our balance sheet to interest rate, which is a sensitivity to short-term rate on one side and long-term rate on the other. So that does have an impact. Investors are always asking us what is the sensitivity. We have a sensitivity of short-term rate, that's for our deposit, sensitivity to deposit. So the figure we communicate, so it's a public figure that we have for 10 basis points of 3 months Euribor, a sensitivity between minus 35 basis points and 0 of 160 million per 10 basis points, basically. And so if the rates go back up, we actually, claw back for ourselves the full amount. And when we go above 0, we start sharing the benefit with the depositors. Then we have sensitivity to long-term rates, which can impact as well the net interest income. So that's coming from the swap portfolio, which hedge our deposit book. And so we hedge by swap with assuming that the deposit are long-term asset. And so there we have a sensitivity of more or less 50 million per 10 basis points, or 25 million per 10 basis points, sorry. And we have a sensitivity for investment portfolio, which is the bond portfolio where we invest the deposit, which is as well 25 million per 10 basis points. So the combined sensitivity is 50 million per 10 basis points on the net interest income. And why? Because if rates are higher, then we can do swaps at a higher level, or we invest in bonds at a higher level. So we will have more earnings, basically more interest rate earnings. And finally, we have a sensitivity coming, but which is not a net interest income, but which is impacting our capital level for the available for sale, which is coming from our pension fund. And there we have a sensitivity of 100 million euro per 10 basis point. Now it's a liability issue. If rates go back up, the liability of the pension fund goes down, and then it's a positive for us. So that's the sensitivity to interest rate. Afterwards, we have in our plan, in our 3-year plan, we have a projection which we communicate to the market. We said that we should have a Euribor by 2019, which should be around minus 5 basis points. Now the curve shows that it should be a higher Euribor, so we are a bit conservative for that. And that we should have a 10-year swap around 0.9 basis point on the euro side. The swaps are higher as well. So we are more conservative. If the rates are higher, should be better for us, both in terms of net interest income, in terms of capital.
You evaluate the counterparty risk on those swaps?
Yeah. But
you do that?
Yeah, we do, because it impacts our counterparty risk and our risk-weighted asset, basically, and some of the P&L we have.
When you were at Société Générale, I was told that you had the flair to refuse to go to the Bernard Madoff Fund. So my first question is, how do you take your decision? What is the part of intuition and the part of rational? And my second question is, when you are a big banker like you, under pressure, do you think that there is a place for the emotions or not?
Give me Hellcat. Yes, there is a place for emotion, because we have Hellcat, so it's a lot of emotion. I think one has to be extremely humble, and the Kerviel issue teach you humility one way or another. You could say that I saw Madoff, but I didn't see Kerviel. You see, so not quite sure which one is the best. The Madoff side is a classic example of going back to reality. Basically, is we were asked to buy a portfolio of hedge fund which was leveraged by credit, and we looked at the performance of the Madoff fund, and it was linear. Every month it was linear, so I said that's a bit strange. So I asked the team to do a due diligence and to look at what was the strategy, and the strategy was to have call and put options, so collars, And so for the strategy to work, Madoff needed to buy shares, which he was hedging, at 2% below the market price, and to sell them at 2% above. You can be good, but that was a bit strange. And then he needed to do a volume for hedging, which was 4 times the volume traded on each individual shares on the Chicago exchange. So that's a bit strange. And then somebody of my family was contacted by a Madoff feeder, so somebody trying to sell the Madoff fund, somebody who is investing into hedge fund. And the guy selling the Madoff strategy said, "Oh, I wanted to come with Mr. Madoff, but he didn't couldn't come today because he was meeting the French scientist who gave him the magic formula to invest into the fund. So I said, the combination of all that mean that we might not do it. And at the time, my team members said, you are not doing that for personal reason, and I will not elaborate on the personal reason. I said, no, I'm doing that because it does not make sense. Something doesn't square, basically. And so if it doesn't square, you just don't do it. So I think that, what you have to do is keep common sense. And, in a bank, you use a lot of models, for instance, and people tend to believe the model. Okay, people feel their job is finished when they have done the model. In fact, your job starts when you have done the model, because now, afterwards, you need to make sure that you go back to reality and your model gives you a proper explanation of what is real life. A few weeks ago, I was discussing with our team members who have automatic approval for loans for our clients, in terms of credit. I said, okay, but, who is going to tell me that the model is not going to create a problem in the portfolio? So who looks at real life? So, but our model is very good. I say, yeah, the model is very good, but in 2007, I was told that the model of the monoline insurance, which were AAA, was very good, and they were, reinsuring AAA assets. AAA on AAA is very good. It ended up not being very good because they were massively leveraged, reinsuring zillions of euros. If you use common sense, I'm coming from Auvergne, you see, so, you use common sense, then you can see that many things should not happen and cannot happen. It's the exponential development of the profitability. It's the nominal exposure you could have on your books, and how you go back to reality. So, afterwards, on emotion, it's, you don't manage people if you don't understand and you don't motivate people. I spend a lot of minutes in my presentation to show that what is important, what we are doing, is how to motivate the 101,000 people we have in the group today, or the 81,000 who will be remaining in the group by 2019. If we don't do that, we don't develop the business. We have two sources of capital within the bank. We have the financial capital and we have the human capital. The financial capital is very easy to raise. Very easy. One way of putting it, you go and speak to investors. The human capital is very difficult to manage. So if you don't show leadership, and leadership, you're not nice when you're a leader. You have to show direction, and you have to make sure that people go with you. My paratroopers, I was the last one to jump from the plane. Why? Because I was pushing the guys outside to make sure that they all jump. That's as simple as that. So, you have to make sure that you push people to do things, basically, and that, they can do things with you. So you have to show leadership. You don't show emotion in a sense that you say, okay, you have to have your nerve. So I'm not showing emotion when, something is difficult. You just give certainty to everybody. Afterwards, you can have your own emotion when you're by yourself. But you have to show a direction, and you have to show people that you're sure of yourself. You can make mistakes, then you correct them, but that's a different story.
What do you think about the future of securitization, and for UniCredit, what are if you see any usefulness for this kind of stuff, what are the important characteristics which decide in which situations you would resort to it? Yeah,
well, I think securitization is a very important product. I think it was a little bit overdeveloped in the past, where people were relying on models, and clearly, as I said, if you rely on model, you make mistake because you don't understand what is the underlying stuff. So now the Commission and the ECB is pushing for simple securitization, where you have simple asset class, where you have tested credit performance, and so where securitization can bring a benefit, so it can bring additional fund into some asset class and improve the IRR for the investor. So, for us, we can securitize, for instance, some of our loans that we sell as covered bonds. We did a covered bond issue this morning, actually, for 700 million euro at a very attractive price below Euribor, 10 basis points below Euribor. And so, securitization, when it's simple, and on simple asset class and well-targeted, makes a lot of sense. When it's complex, forget about it and never do any complex things.
In fact, I have two. The first question is around the fact that you said that banks were deleveraging, but the market, the appetite for risk is still there for investors, so the money went somewhere. So there's a risk somewhere, and I wanted your view on that.
Yeah.
The second question is a follow-up question on consolidation. What about European consolidation?
Yeah. Well, the money today is going in yielding assets. So it's going into credit mostly. If you look at the benchmark for credit, which is the leverage loan yield, it was last year when I was still managing a leverage loan and direct lending portfolio, it was around 4.25%. Today it's about 3.25%. So we lost on leverage loan 1 point, which is massive basically in a year. So because you have a lot of money going into credit. So I think investors are putting money into credit. I still feel credit in terms of risk reward is one of the best asset class we have today, but it's clear that the spread are tighter, but it's mostly into credit. On the consolidation, the regulator, the European regulator, Mrs. Nui, said that she encouraged more bank consolidation, and it's fair to say that in some countries there is too many banks. Fine and fair enough. Our plan is purely organic. So, we work on an organic basis in order to transform the bank, and we don't look at any consolidation. So, and afterwards, others can do what they want. I don't care. I do care about what we are doing.
I have two questions, actually. The first one is, many European banks are facing challenges, especially Credit Suisse and Deutsche Bank. Do you suggest that they have to adapt their strategy to focus on the core business as UniCredit did? And the second question is about the pan-European word in your strategy.
Mm-hmm.
You know that the European Union is facing many challenges nowadays with the rise of Eurosceptic movements in many European countries. How do you answer to this threat actually in your strategy?
Yeah. Well, first of all, I never comment about the strategy of other banks because that's their problem, it's not mine. I think that strategy of Deutsche Bank and Credit Suisse is probably much tougher than ours to define because of their business model and their mix. And Tidjane Thiam was actually in class prepa with me, in Polytechnic with me, at l'École des Mines with me, so I know him very, very well because he's a buddy, and discuss with him regularly. And I think what he's doing is very good. And it's a difficult, it's a difficult strategy to put in place. Ours is much easier. And for Deutsche Bank, John Klein is doing a wonderful job, and there as well, it's a difficult turnaround for the bank in a very competitive environment, investment banking, and I think they will do very well. We were, very active and very proud to support them for their capital increase, and I think they will do very well in the future. So, but it's more difficult for them. For us, it was easier to define the strategy. I think for Deutsche Bank and Credit Suisse, it's a bit more difficult. So that's it. About Europe, one has to be a little bit optimistic and not go through the Anglo-Saxon brainwashing, to remain polite. The British decided to exit Europe. That's their decision. But they were never European when you look at it. They were always on the fringe of Europe. If you look at Europe and the benefits that we as countries or we as citizens get from Europe, they are huge. I was discussing with a former Polish minister recently, and he's now working for a private equity fund. And I was asking him, what is the feeling about Europe in Poland? It's probably the Poles are very supportive of Europe because they get the European subsidies. He said, no, not at all. They are very supportive of Europe because of peace. It's the first time Poland has been in peace for a long period of time. And, without Europe, we are aggressed by the Germans, by the Russians, by whoever. So he said, Europe brought peace. And he's right. The first benefit of Europe that most of you will forget is that Europe has been bringing peace between the European countries. And, the peace angle is actually extremely important. So forget about, the speech of the populist politicians. Peace is the most important item. Just think about 1 second. When we are without peace, it's a nightmare basically, and you go back to things which were very difficult. Two is when you look at the benefit brought by Europe, it's unbelievable in terms of trade exchange, in terms of movement of population, in terms of evolution that Europe has been bringing. So you need to be completely mad to be against Europe, or you want to be a politician which has a very short-term view and just want to use fake news or fake proof to prove to people in Clermont-Ferrand, where I'm coming from, that all the problems are coming from Europe and globalization and immigration. Read The Second Machine Age, the book I mentioned at the beginning. The problems are not coming from globalization. They're coming from technology. Why do I reduce 14,000 people in UniCredit? It's not because I'm using people from India or from wherever. It's because of technology. It's because I'm simplifying my processes. It's a process-based business banking. Process-based means that every process will be replaced by computers and by software. So it is unavoidable. So a lot of jobs are disappearing. Not only the blue collars in the factories replaced by robots, but the lawyers in a bank or in a law firm and the bank employees. It's unavoidable. So what will remain is only people who can bring either client interaction, a very specific client interaction. One of my golf partners is a very wealthy man who sold his IT company a few years ago and is a venture capitalist. And he told me that Deutsche Bahn, which is the railway company in Germany, is trying to figure out how to put robots, but having human shape, basically, which will be retro-lighted. So which means that you can have a face on the head which speaks to you, and the face will take various expression. And now the companies which is invested can not only devise the change of expression, but understand the emotion of the client and have the computer answer in the proper way to match the emotion of the client. So, it's not about press item number 1 if you want to make a transfer, item number 2 if you want to do that. It's the computer will speak to you and will speak to you with emotion. So, that's technology which is changing things, but Europe will continue because people do not commit suicide voluntarily. One last question.
So you said before that UniCredit is now a European bank, but you still have the headquarters in Italy. So my question is, are you worried about the political situation in Italy, and is it going to affect your strategy?
Well, first of all, UniCredit has a wonderful operation in France. And Patrick Soula, who is the CEO of our French operation, and he is the only one to wear a red tie, like me, so you will very easily find him if you want to give him your resume, has developed the bank in a wonderful way. You have more than doubled the profitability of the bank, I think, in a few years, by offering UniCredit to our French clients. And they love us and do a lot of business with us in Germany, in Italy, in the CE side. And we have an unbelievable market share and an unbelievable perception of our French client. Thanks to Patrick, to his leadership, to all the team members here. But clients do work with us in France because they see us as a very credible alternative, because we deliver value to them, basically. So, and if you want to apply to Patrick, we are not hiring a lot, but, we're always happy. And if you're a client, please do business with UniCredit, and Patrick will be able to do business with you. That was my half-a-second marketing for our French business. But, I think that, we will develop the bank, and we can make the bank extremely successful in what we do, because we need to have pan-European banks which deliver pan-European service to their clients, and that's just the beginning, basically. So there are two banks. The biggest lender is BNP, who are just behind BNP today in terms of lending to European corporate clients. When you lend more than 400 billion to a corporate client in Europe, we have 25 million clients in UniCredit, 25 million. 24 million retail clients, 1 million corporate clients. It's a lot of clients. Okay. So when you have so many clients, you can only do wonderful things, basically, and develop the bank and make it a huge success. That's what Patrick is doing in Paris. That's what all the team is doing in the various countries, and that's why UniCredit is and will be the best bank in Europe. And on that, I will stop. Okay. Thank you very much.